All right, let's jump into your personalized market deep dive for the week. We're going to be looking at the weekly market report, January 2024-2025, from our friends over at Market Deep Dive. Seems like it was another pretty crazy week out there in the market. So big tech was, well, doing what big tech does, shaking things up a bit, but also a kind of surprising sector really took the lead this week. And maybe, just maybe, we've got some clues about where things might be headed. So ready to decode all this.
Absolutely. Let's dive in.
Okay, so looking at the big picture, the report paints a pretty positive picture overall, right? The Dow jumped up 2.2%, the S&P 500 climbed 1.7%, and even the Nasdaq managed a, not too shabby increase of 1.65%. It feels like maybe investors are finally starting to breathe again after all that volatility we had earlier this month.
Yeah, for sure. It is interesting to see this upswing continuing. You know what I think is really fascinating, though? It could actually signal like a real shift in how investors are feeling. Maybe there's this growing sense of relief, or I don't know, at least like cautious optimism regarding inflation and interest rates. I mean,
Yeah, that makes sense. Everyone's been on the edge of their seats waiting to see if inflation's really going to cool down. But I got to admit, the thing that really surprised me was how strong the industrial sector was. Up 2%. That's not something you see every day.
definitely noteworthy, especially like if you think about all the policy changes we've seen recently. It almost seems like the market is interpreting all these moves, especially the ones about infrastructure as like, potentially a good thing for industries here in the US.
Yeah, the report even highlighted companies like Boeing and Caterpillar as leading the charge in the sector. And with all this talk about more infrastructure spending, I guess their success isn't really a surprise, is it? But the question is, how long can this growth actually last?
Yeah, that's the million-dollar question, right? It's something investors are definitely wrestling with right now. I mean, the initial reaction to all these policy announcements has been positive, no doubt. But what are the long-term implications? That's the thing. We have to wait and see how these policies really play out in the long run, and how they might affect different sectors down the line.
True, true. Okay, so let's shift gears a little and talk tech. Some jitters early in the week, as always, but it seems like the sector ended up bouncing back, ended up around 1.6%. So what do you think drove that turnaround?
Well, a few things going on there. NVIDIA, for instance, they saw some big gains this week, and it seems like that was driven by, really strong demand for their AI chips, which honestly, that kind of speaks to how fast AI is being adopted across so many different industries. Could be a sign of long-term growth for companies like NVIDIA, that's for sure.
That is really interesting. We hear so much about AI all the time these days, but it's easy to forget how it actually translates into real market moves. So NVIDIA is riding the AI wave for sure. What about some of the other big tech players though, like Apple?
Ah, Apple, yeah. They had let's call it an interesting week. They took a hit initially, right after some analysts downgraded them, but then ultimately they recovered thanks to a pretty positive outlook for their services segment. I think it highlights the whole debate that's going on right now about, tech valuations and the potential impact of those rising interest rates. It's like, can this growth actually be sustained, or are we headed for a correction?
It does seem like that's the question everyone's trying to figure out. But even with all this uncertainty around tech, there were definitely some winners this week, right? Netflix, for example, their stock jumped almost 8%, and that was after they absolutely crushed subscriber growth expectations.
Oh yeah, Netflix. That really shows you how resilient consumer spending can be, even when there's so much economic uncertainty. It also just underscores how competitive that whole streaming landscape is. I mean, to really stand out these days, companies have got to deliver amazing content and pull in those new subscribers. Netflix seems to be doing just that.
It's crazy how fast things change in the tech world. Speaking of change, though, the report also mentioned 3M having a pretty strong week. Their stock was up more than 4%, right? And it looks like that was driven by solid earnings, especially in their industrial adhesives and electronics businesses.
Yeah, that's a good sign for the corporate sector overall, I'd say. 3M's doing well with industrial adhesives and electronics. It suggests that companies are still, investing in coming up with new stuff, which, that's generally a good thing for economic growth.
Makes sense. Okay, so we've talked a lot about stocks, but what about bonds?
Yeah.
I know a lot of people look to bonds as a safe haven when things start to get a little crazy in the stock market.
You're absolutely right. And this week we saw the yield on the 10-year Treasury note dip just a little, down to 4.75%. So that could indicate that maybe, just maybe, investors are feeling a little bit more comfortable with the inflation outlook.
So maybe easing up on that whole flight to safety strategy a little.
Not necessarily abandoning it completely, but maybe shifting gears a bit, yeah. It seems like there's a little bit of a move towards bonds as a hedge, against that stock market volatility. Doesn't necessarily mean they've lost faith in stocks, though. Maybe it's more about wanting some stability, some diversification in their portfolios.
Makes sense. Always got to balance that risk and reward.
Mm.
But so far, we've been mostly focused on the U.S. market, right? What
Yeah.
about what's happening globally? The report did touch on some global trends.
Right, globally, it's a mixed bag. European markets were kind of all over the place, some cautious optimism there. Maybe about the potential impact of U.S. policies on global trade, who knows? Japan's Nikkei 225 saw some gains, though. Seems like there's hope for stronger economic ties with the U.S. But then you've got China. Their markets were a lot more subdued this week. Investors there are keeping a close eye on U.S. policy trends and, of course, on their own domestic economic data.
And what about those always unpredictable emerging markets?
Oh, the emerging markets, always facing their own unique set of challenges, lots of volatility as usual. But I think the important thing to remember is that what the U.S. does, especially with policies related to trade, can really have a ripple effect across the whole global economy.
Yeah, it's a good reminder that everything is connected. One country's policies can create opportunities, but also uncertainties for everyone else.
Exactly. It's a complex landscape out there. And understanding those connections is, well, it's crucial if you want to make smart investment decisions.
For sure. Well, before we get too deep into all those complexities, I think it's time for a quick recap, don't you? What are the key takeaways from all this market action this week?
Okay, so if I had to boil it down, the main takeaway is that, yeah, there's this sense of, like I said, cautious optimism, driven by, well, earnings that were better than expected, policies that seem to be resonating with investors, and signs that, maybe inflation is finally starting to stabilize. But, and this is a big but, we are still in a pretty volatile environment. The global economy is still a bit shaky, interest rates could change at any moment, and we still don't know the full impact of all those recent policy changes.
So cautious optimism for now, but buckle up, it could still be a bumpy ride.
Yeah, always a possibility. Doesn't mean it's time to panic, though. This is where making smart, informed decisions really matters.
Don't just follow the headlines. Do your research.
Exactly. Take the time to figure out what your investment goals are, how much risk you're comfortable with, and how all these global trends might affect your own personal finances. That's where a deep dive like this can really come in handy.
Helps connect all the dots. See the bigger picture.
Yeah.
And speaking of connecting dots, you mentioned the industrial sector earlier. I know there's been a ton of talk about infrastructure spending. So what are some things our listeners should keep in mind if they're thinking about exploring that sector?
That's a good point. The industrial sector is definitely one to watch right now, especially with all this potential for long-term growth because of all these infrastructure initiatives. But, and this is important, it's not a, one-size-fits-all sector. There are all these different subsectors and companies that are going to be affected in different ways. For example, companies that focus on construction materials or engineering services or transportation infrastructure. They might see different levels of growth depending on how those policies are actually put into practice.
So it's not just about jumping on the infrastructure bandwagon. It's about understanding the details.
Exactly. It's about figuring out which companies are in the best position to benefit from these trends, and then making sure those investments align with your own financial goals and risk tolerance.
Doing your homework is key. Now, I want to go back to something you said earlier about how interconnected the global market is. It's easy to get caught up in all those day-to-day market movements. But it seems like taking a step back and looking at the global perspective is really important for long-term success.
It really is. The global economy is like, I don't know, a giant ecosystem. All of these different forces are constantly interacting and influencing each other. So if you want to make good investment decisions, you have to understand those connections. You have to be aware of the potential risks, but also the new opportunities that are emerging. It's not just about what's happening where you live. It's about understanding the whole global landscape and how it might impact your financial future.
Well said. And I think that's a great place to pause for now. Thank you for breaking down this week's market report with us.
My pleasure. And remember, staying informed and engaged is the key to navigating the world of finance.
It's always changing. To our listeners, we hope this deep dive has given you the tools you need to make smart decisions and to approach the market with both confidence and a healthy dose of curiosity. Thanks for joining us, and we'll catch you on our next deep dive.